everyone. Today I'm going to be talking to you guys about what are some of the things you need to be aware of if you are looking to invest in the share market. Now, as we all know, over the last couple of months, share markets have gone down significantly all over the world, but this presents some very unique buying opportunities for savvy investors. So today I wanted to talk to you guys about what are some of the things you need to be aware of if you are going to be investing in this space. And if you are looking to get money into this space and looking at investment opportunities in this space. Now, first and foremost, I do need to remind you, this is general advice only. I don't know what your personal financial goals are, or your investment horizon, or your risk profile. So this means that I am unable to provide personalized advice here on TV, but if you do need to, you can contact our office and we can get into that. So this segment is meant to increase your knowledge in this space and to build your confidence around share investing. So the first thing you need to be aware of when you're looking at shares is the fact that it is a long-term investment. Now, by long-term, I mean you need to be thinking of having your money in there for at least 7 to 10 years. So if you are thinking of setting aside any money that you're saving for a deposit for a house or a wedding or a car or a holiday, for example, trying to think now is a good time to put this money into the share market and gain some quick gains, I would caution you to think twice, because you might be forced to sell at a very wrong time and you might be forced to lose some of the capital that you put into the market if you took it out at the wrong time. So you need to be aware, whatever money you have and you're putting into the share market, it needs to be able to be in there for at least 7 to 10 years. So a longer investment time horizon is the most important thing. The second thing you need to remember is the fact that shares are very volatile. Now, as you would have seen the sensationalized headlines over the last couple of months, it's been a bloodbath, and the fact that billions have been wiped off the share market. So you need to understand shares inherently are very volatile. The share prices bounce up and down. It doesn't necessarily mean that the company you are invested in is doing badly or doing well. Sometimes anything that happens in America can affect Australia. Whatever the president says in America has an impact here. So the share prices react to information on any given day. It doesn't necessarily mean that the shares that the company that you bought in is bad. It just means that people react for different things. So please be aware, if you are going to be investing in the share market, that the price will go up and down. So if you are going to be watching the share price like a hawk and get upset at every time it goes down, well, you probably need to sit on the sidelines a little bit longer and educate yourself a bit more in this space so that you can get comfortable with the inherent volatility that is there in share investments. The third thing to remember is you need to be able to diversify your investments. Now, what I mean by this is you need to have exposure to different companies, different industries, so that your portfolio will have smoother returns. Now, say for example, if you had invested your money in Qantas. Now, as we all know, Qantas, because of the international travel restrictions over the last couple of months, Qantas shares have gone down significantly. So if you had all of your money in Qantas, your portfolio would have taken a massive nosedive. Now, think about it this way. If you had your money invested in Qantas, but also Woolworths and Coles, for example, with all of the stockpiling that people did over the last couple of weeks, share prices in Coles and Woolworths had gone up. So your portfolio would have had negative returns, but also positive returns, meaning overall your returns would have been a lot smoother. So if you had the benefits of diversification, you would have had much more smoother portfolio returns. Now, the next question you would ask is then, if you are investing a very small amount of money into the share market, how are you going to get the benefits of diversification? That's where things like listed investment companies and exchange traded funds can help you, where you can access the benefits of diversification, the option to trade on the share market, but also be able to buy just one investment and use a very small amount of money and still get the benefits of investing in the share market. Now, in future weeks, I will talk in more detail about what exchange traded funds are. But for the moment, for the people who are thinking of looking at this space, I hope I have given you some things to think about. But also remember, you do need to be very mindful. Ask yourself the question, how much money you have to invest? What is your investment time horizon? What is your risk profile? Are you going to be comfortable with the volatility associated with the share market? And think about it from a personal financial goals point of view before you get into this space. So it's not something you should rush into. There are certainly opportunities available in the market right now, but please make sure you get the necessary knowledge and education before you venture into this space. So until I see you all again, bye for now.